All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday, January 25th. We will be reviewing price from Friday, January 24th. I usually don't do market reviews on Friday. Try to spend some time with the fam and all that good stuff. Just kind of let everybody decompress and all that good stuff. But I jump right in on Saturday mornings, do a market review, and open up the Discord for Q&A. What did we have? As you guys know, I trade the Dow Jones, so that's what the plan I made. I made a plan for the Dow, but I'll also be going and reviewing the members pre-market plan for the S&P 500. And if anybody else wants to start making pre-market plans for the Nasdaq, I'll review that plan just to see how it worked out as well, right? So, what was my plan? What were my thoughts on the day? The gray box is usually just my macro thoughts on the day. Again, I write this plan at like 6, 7 o'clock in the morning, so it's basically my thoughts on what I expect to happen on the day. So the current conditions where we were in a bearish retrace of a bullish trend, we can clearly see, looking, zooming out, this trend is bullish, right? There's no question about that. But all trends usually have a retracement, right? It was Friday. We hadn't retraced all week. We were at 4-hour supply. I thought this was a good time to expect a little bit of a consolidation and or retrace down into structure, right? So I was bearish as long as we stayed below 44,924. I was bullish as long as we stayed above 44,194, which is this 4-hour support down here, 44,196 right here. So the closer we get to 196, I'm looking to go long. The closer we get to 924 up here, I'm looking to go short. The market has been rallying all week, and yesterday we hit our last weekly projection on to the bullish side on the Dow. I believe our weekly projection was at like 40. I deleted it, but I think it was like 44,768 or something like that off the 4-hour support. Once we found the low of the week, and we went right to it, and I mean just stopped on the nose. Right, I pointed it out to the Discord. I posted it in the chat. I was like, hey, we just hit our weekly projection to the bullish side. This is a good time to start looking for shorts. Or at least that's how I look at it, right? You can do whatever you want. You can continue to long it and do whatever you want. But from the data, right? The data doesn't lie. Numbers don't lie, right? So if the data is telling you, hey, we've reached our weekly projection, we've been rallying all week, it's probably a good time to start looking for shorts, right? So I will be looking for buyers to take some profit and for the market to cool off a bit, right? So essentially, I'm already like putting myself in the right direction. That's what I'm doing when I'm doing these macro breakdowns, right? I'm telling myself, hey, these are the reasons why you should be looking for shorts versus looking for longs, right? Context is the most important thing when you're trading, right? You can have all the understanding of market structure. You can have all the understanding of macro time, supply and demand, book map, footprint charts, order flow, like whatever it is, right? If you don't understand the context behind the market, then it's just a bunch of random shit that you're studying, right? That sometimes work, right? Sometimes it works, sometimes it doesn't. The times that it doesn't work is usually because you're missing context inside the market, right? So if you have the context of the market, which is why I always do a macro breakdown, then I understand why these levels should work. Like, yeah, these are my planned levels, but why should these levels work? It's because of the macro, right? It's because of the context, okay? So our PM session lows, PM session highs, or our chessboard levels, 44,757 through 44,736 at the highs, 44,705 through 44,659 at the lows, right? Our supply zone above us, we were looking to short weak rallies into 4-hour supply at 44,738 through 44,929, and we want to look to target this 4-hour demand. Now, when I say target 4-hour demand at 44,384, again, context matters, right? So when I look to target this, I'm paying attention to how aggressive these sellers are being, right? I'm not going to hold this all day into this 4-hour demand if the sellers just don't look strong. They just look like they're still building buy side positions. So when I say look to target 384, my first target is going to be the daily demand, right? Or the daily fib, right? So if I'm getting short 44,738, and you can look, we went right to 44,738 essentially, right at the high up here. Like this was the level 44,738 through 44,929. The high of the day was 44,771. So we got you within 40 points. And really, inside of the session, we got you right on the money, right? But anyway, it doesn't matter. Like, it's not about bragging or nothing like that. It's just when you understand the context, these are things that you can pay attention to and plan for, right? Our demand zone, the only level that I was really looking to get long off of, right? I could have got long off the daily demand. I could have got long in the middle of price right here, but I'm a reversal trader. I try to long at extremes. There was a fair value level in here that I'll show you later. There was the New York Open, but I didn't want to trade there because it wasn't an extreme for me. This is an extreme here, right? When price comes here, this is when I want to get long, right? If price is up here, I'm waiting for it to pull back up so I can short it. That's it, right? There are no longs up here for me, right? The only way I'm getting long is if price comes down to this green box, this purple box, or, I got more levels that we'll talk about in the top down analysis later. But you just got to understand, like, is there opportunities inside of this? Absolutely, right? But you gotta realize who you are as a trader. And I've realized who I am as a trader, and who I am as a reversal trader. I only traded extremes. If we're in the middle, the price is irrelevant to me. It really doesn't matter, right? So anyway, let's go down to the 15 minute and let's break down the Lux algo sessions. When we talk about liquidity, this is what we're talking about, right? So we'll start here with the sessions, right? And you just look at Sydney, right? Right here. Sydney is the grayed out box here, right? You got Sydney, Tokyo, and London, right? If you look at Sydney's liquidity, where is it? Basically Sydney put in the high. And if you know the pattern that we always discuss, right? That 3-bar candle pattern, the inverse head and shoulders, the head and shoulders, it's like a Batman signal, right? If you take a look at this, the Batman signal has been, it's there, right? All day long. Left shoulder, head in Sydney, right? And then in London, which is where I took my trade, there's the other shoulder, right? Then we come down, right? We do the same thing coming down. We go right back up and create the same head and shoulders pattern, but we do it lower, right? Here, and then on this side here, right? If you just can pay attention to that particular pattern, I promise you, your entry criteria will become seamless, okay? So in regards to the liquidity, if everything's above us, right, or everything's below us, so to speak, we're tapping in the higher time frame supply. And then when we break down the structure, I'm gonna show you how we broke structure too, right? That means that everything above this high and below this high is all bearish character, right? Like we're looking to push down further, right? That's the context that I keep continuously will preach, because it's very, very important, right? So we go down to the macro time, and we go down to about the 5-minute chart, right? And I'll show you, I've recently started trading London sessions. I just realized, like, hey, I'm a reversal trader. I need to be trading more so at a reversal time. And I really like London session liquidity, and how the price is developed. And it gives me an opportunity to trade at the ultimate extreme, right? So, but structurally, okay, if we look, first, let me turn off the macros, because I want to talk structure. I don't want you guys to get distracted, okay? So let's talk structure, all right? Whenever the market breaks structure, right, it has to go back up and retest the area, right? I don't care who you talk to, right? Whenever the market breaks structure, breaks a low or breaks a high, it will come back and retest it, right? It's over time, right? However long it takes, whatever. Depending on the time frame you're watching, right? The market's still going to break that low and then come back up and retest. I'll give you case in point why I was looking for shorts right here, okay? One, confluence number 1, 4-hour supply zone. Automatic, trying to figure out if the market's going to short. Confluence number 2, are we at premium or are we at discount? Well, how do I get that answer, right? I zoom out to the weekly time frame, right? I just look at the weekly time frame. I don't care about, the 5 or the 15, whatever, when I'm trying to gain a bias, so to speak. This was discount on the weekly because this was the low that we broke right here. We definitely broke this low. So if we're leaving discount, right, and headed to premium, supply, demand, however you view it, right? The language doesn't matter. Just know that the prices were cheaper here. They're more expensive up here. So if we're up here, right, we haven't reached the ultimate premium. but we're heading now into where prices are not as expensive or as cheap. So now officially I can definitively say we're in premium. Okay, so that's confluence number 2, right? So now that we're up here, I'm clearly looking for shorts, right? I'm only looking for shorts, right? I do not care if this market rallies another 100 or 200 points. I'm only looking to short it because I have the confluences, okay? Confluence number 3, which brings me to my point of structure. Whenever you're watching structure, you want to look for lows being created. And in order to make this a low, in order for this to be a low, it has to be validated by bringing in a new high. Well, this was the previous high, right? And when the market created this low and got above that high, it created a new low. So this right here is the swing low, okay, of this dealing range. However, we also create intermediate lows, which is right here at 746. This low brings a new high, so it is now a validated low, right? It is a tricky low to play off of, but if you're in the right area, i.e. supply, heavy premium, right? Now you can use this low to get a proper entry. This is all I do, ladies and gentlemen. Once I see these lows break or this low break, right? And I want to see it break definitively, right? I don't want to see like, you know, this wiki shit or whatever. No, like 1, 2, 3, 4, 5 strong candles coming down. I'm not shorting up here because one, I'm not even trading at this time. I'm not even looking at the chart at this time, right? But me trading in London, I'm looking to trade at or around 350 in the morning. So when I come into the market, I'm just looking for change of character, structure shifts, so I can understand what the market's doing. This high brought this low, and it's below all of these lows. Therefore, I can do one of 2 things. The first thing I can do, I can take a Fibonacci retracement and I can go from the swing low, right, up to the swing high, right, which is this high here, right? And I can mark out the 30, the 50, and the 70. I can trade at 30, I can trade at 50, or I can trade at 70, looking for shorts. And my invalidation point is simply above this high because this is the validated high. That's all you're doing, okay? Which means that if you trade here at 756, your risk only really needs to be 20 points, okay? But if you wait till price comes down here, the true invalidation now is up here. Now your risk to reward gets a little bit more expensive, right? 67 points. I prefer to trade right here. That's option number 1. Option number 2, when I'm looking to trade, I say, okay, I'm lining time with all of my other confluences. And this is when we'll bring in our macros, right? So let's go down to the macros, okay? Not that one. Let's go to here. Okay, perfect. Now you can barely see this. It's a little faint, at least on my screen. 350, 410 is the close of the hour candle, right? That is the macro time, the last 20 minutes of a candle and the first 10 minutes of the hour candle. That's the macro, right? What I like to see in this situation is I like to see the market trade up into the macro while also lining up with structure. So I take this fib. I don't go from this swing low. I go from the most recent low because I want to get the tightest entry possible, okay? And if you look, it lines directly up with 50%, right? 44,760. If you guys are looking at the Discord in the mornings in the shop trade ideas section, I literally posted, hey, I'm short 44,756, right? I just missed the absolute top of the day, right? The market, my risk, I gave it a full 800 because my thought process was, well, if I'm off, we may run this, but I'm willing to hold it or add to it above 800 because the market's not perfect. Sometimes it'll do some out of pocket shit, right? But for the most part, I only really had to risk 5 points on this trade, right? Because I mean, I was never in drawdown. I got 4756 and I was never in drawdown. I could have immediately went to break even and I would have never gotten stopped out all day long, right? Something I'm working on is whether or not I want to hold this all day. I think for me, it's about how many contracts I put in, right? If I put in 3 to 4 contracts up here, then I'll hold the runner all day until I hit my TP. But If I only got one contract, I'm locking in 100 points, right? No matter what. And that's what I did. I locked in 103 points on a trade. Neither here nor there. Like that's not what I'm trying to explain to you guys, right? But if we come down to the 1 minute and we follow time and price, right? Like I just wanted to give you guys a full breakdown of how I look to enter trades, right? Because a lot of people will ask me, you know, like, hey, what are you doing? Like, how are you getting this entry? Whatever. Like that's it right there. That's the sauce. So you can rewind this review back, play it back 1,000 times, but it's not gonna work for you because you're gonna have to go practice it, right? You're not gonna be able to just do it because Hobbs said it works. You're not gonna believe it, right? You're not gonna believe it until you go practice it yourself. Okay. But anyway, let's go into 9/29/30. And I wasn't even looking to take trades at this point because again, I could have took longs in here and just targeted midnight, but at this point, New York Open was kind of in the middle of price for me. So I was just hesitant to do anything here, right? I wanted price to be at more of an extreme, but this is when also I realized we're starting off in the middle, not at an extreme. We're probably going to get an inside day, and we ended up getting that as well. So we traded down into 9/29/30. You could have been looking for longs at 44,628, targeting midnight price right at 722. Again, really, really tight range for the, I mean, if anybody knows Dow Jones, this is tight, right? This isn't, if you get a perfect entry, you don't even get 100 points before we come right back down, right? We sweep midnight, come right back down, sweep down below New York Open, finally get the dip inside of 950 right at 10 o'clock, shocker, right? We say this every day. Right at 10 o'clock, the market rallies, gets above the high. And if we go over to my favorite time at 10:37, right at 10:37, you could have bought right here, stops below here. Market never really drops below this level until later on in the day. But that's another entry down in the 1050. We sweep that low, come back up to 1125, right? And then this is where we come all the way back up to the pre-market plan area at 44,738, right? Which is the exact level we talked about in the pre-market plan, 44,738, right at 1225, trading up into the 1225 macro. This is what you call a triple entendre, right? In rap, right? Like this is literally the triple confluence. Your pre-market plan hits 44,738. Market trades up inside of a macro, right? While also trading back into 50% structurally, 50% of this previous low and this previous high, right? Like, I don't know what else you need, right? Look at this. Perfect 50% tap at 743, right? The market is predictable. You just have to believe that it's predictable, right? The more that you backtest, the more that you see your system work out, the more confidence you will become, right? We drop into 738. We start to trade down. 110 brings us up, and then 345 brings us, I mean, we trade down into 345, where we finally hit my first profit target at 534, but we hit this at 350. I did not get into day trading to be at the market all day long, right? Like 3-4 hours. I didn't do that. I mean, I could have put it on, left the runner. If I had 3 or 4 contracts, I would have let the runner run all day. I would have just put the runner at break even and let it run all day until it hit my TP. But I wouldn't have been here watching it, right? But that's just a really good example of just like trading plans. You know, if that's your thing, that's my edge, right? My edge is always my trading plan. So if that's the thing you like, I'm telling you, it really helps me kind of stay balanced, right? So anyway, I'm gonna read to you guys kind of the pre-market plan provided from Trading Yoga Girl, because she had a really saucy plan today. She followed the plan. I think she's only taken 1 loss this week. She's still trading in demo, but she's killing it, right? Like just really focused on the pre-market planning, you know, executing those trades. And then, you know, even when she gets a bad entry, she understands like, hey, I'm just going to put 1 contract here and then build so I can get the entry that I actually want, right? So, okay. So, her plan was essentially we were bullish, right? But she understood that, you know, the retracement was coming, because she said we traded around the top of the range. We then trades between finding support at 61.40. We're currently trying to trade back into the top of the range right at New York Open, which I suspect we will trade out, right? Look to short the high of the range at 61.49 through 61.53. That was her plan, right? Look to target the low of the range at 61.34 to 61.29. That was her plan. That was it, right? Look for sellers to reject 61.49 to 61.53 and target 61.29 to 63.4. I don't like to beat a dead horse, but guys, when you understand that the market is doing the same thing over and over and over again, it's being delivered differently. The shit should start to get boring to you, right? And you should start just trading your areas. Like for me, I'm starting to get real like calm when I'm trading, right? I haven't reached the pinnacle of where I really want to be yet, but I'm working toward there, and I can feel myself getting closer and closer to that level. So like the more I do these market reviews, the more I do these top-down analysis, I've been doing them for over a year, right? The more I start to see how repeatable this market is, the more I do my back testing, the more I chop it up with the Discord, right? It's only making me better. I don't run a mentorship, I run a community, right? So like we're trying to all get better every single day, right? So anyway, 61.53, she got short 61.49. Stops were up at 61.62. Now, some people may say, hey, why are you giving yourself such a huge stop? Well, what you should ask yourself is, what is the purpose of a stop, right? Is the purpose of a stop to make sure you don't lose, or is the purpose of a stop to understand when you're wrong, right? I'll let you debate that all day long. For me, the purpose of my stop loss is if my stop loss gets hit, right, it's a loser for me, yes, but the market should do one of two things, right? And this is determining what I'm going to do after my stop loss gets hit. If my stop loss gets hit, it's because the market should continue to go higher, which is what I would prefer, because that means I'm just wrong on my analysis, right? And I'm okay with that. If my stop loss gets hit and the market immediately does what I wanted to do, I'm getting right back in, right, at that level, if not even higher, right? Because that just means that my stop loss got ran, but the market still agrees with my thesis. The delivery was off, right? In other words, your stop loss should be at an invalidation point. What makes this an invalidation point is structure, right? This low right here, just like we talked about on the on the Dow Jones, on the S&P 500, the last low that brought the high was 61.5450. The high that it brought was 61.62, right? As long as the market stays below 61.62, you should be good for shorts. Now, you want to short closer to 61.62 than you would, 61.49, but her first entry was at 61.49. She took one micro contract, right? And she said, okay, every time it comes up, I'm going to add contracts. By the time she got done adding, her entry was at 61.52, right? She stayed in this trade all day. It was the only trade she took. Her risk was 10 points, very well managed, right? And her reward was 61.29, which means that she got in at 61.52 total. She got out at 61.29 for a 23-point win. That's almost a 2-to-1, a little bit over, basically a 2-to-1, right? A little bit over a 2-to-1, like a 2.1. But it's the only trade she took on the day, right? And it netted her 23 points because she understood, 1, the direction, 2, the invalidation, right? And 3, she was confident in her system, right? I'm not trying to encourage you guys to do exactly what yoga does or do exactly what I do. What I'm trying to do is share with you that there should be some level of peace when you're trading, right? You should not be frustrated, upset, scared when you're trading. The only way you get to that level of peace, in my opinion, is you have to go in and dissect your system so that you understand how your system works with the market, where your system works, where it doesn't work, right? And it should be something, when you have a true system, it should be something that's repeatable every single day. Your entries should look damn near identical. Your trade setup should look identical. Your thought process should be identical every single day. If you find yourself every day writing a sporadic plan or, doing something totally different every day, you don't have a system, right? And your system, you need to go under the hood. You need to work on your system. Last but not least, we'll break down the NASDAQ. Again, nobody really gave me a plan for the NASDAQ, but I always chart it, right? So, because I like to review all of the instruments just in case, I ever just fall out of love with the Dow Jones or something. I want to be in tune with what they're all doing. But I can tell you right now, if I was trading the NASDAQ, I said it when a couple of members trade the NASDAQ, I said, I'd be short at 22,007,150. Why? Because I know that that's where supply is, right? We got this shoulder here. We broke structure, right? I'm looking for the market to run that high, runs right into the confluence. If you turn on the macro time, right, it'll probably hit this level. Oh, look at that, right inside of 950. We run right inside of 950, right at 22,071.50. We rally straight down, and if you miss this entry, the market gives you another entry at 50% of the previous high to the previous low, or previous high to the previous low, which would be these lows right here, right here. And we'll turn them yellow so you guys can see a little better. Again, any instrument, anytime, it all works. It's all the same. Structure, time. You just have to find a system that works for you. If all of these lines and boxes, and supply zones and markers and fair value levels don't work for you while you're looking at my screen, then maybe my system ain't for you. But all of this shit works for me, so that's why I use it, right? So we trade up into 1150, we trade down, and then it's just ball game from there, right? I'd have been short 22,071 on Nasdaq, and my first target would have been 21,959, and then my final target would have been 21,907. But if I saw us just bleeding out, I probably would have just targeted previous day low. But those are my thoughts on the market today, guys. Again, if you need help building a system, if you want assistance from me personally, I'm always here, right? You guys, you don't pay that much to be in the Discord, but you can take advantage of everything that the Discord has to offer. Stay tuned for tomorrow while we breaking down the top-down analysis. But my name is T. Hobbs. This is the Market Review. We'll catch you guys on the next one. Peace.